Thanks, all of you, to join us this afternoon for this session on mobile money. It's not the best time slot, it's right after lunch, so I really appreciate your presence, and I hope this session will be interesting for you, will raise interest, questions. So after this presentation, we'll have a great panel with 5 panelists, and hopefully we'll keep time for Q&As, as I'm sure you'll have lots of questions. So this morning I told you briefly about the GSMA because I wasn't sure how familiar you would be with this institution. So I'm not going to repeat myself, but I want to tell you more specifically about what we do in the area of mobile money. So our role, our mission is to support the industry to grow, scale in a sustainable way. And we do this in a number of ways. We work on intelligence and data, so we provide insights to the industry so that mobile money providers and stakeholders have a better understanding of how big is the industry, how it's evolving, what are the key trends. So we do a lot of market intelligence. We also work on the commercial aspects of mobile money, so we support mobile money providers on the ground, dealing with the operational challenges associated with rolling out mobile money services, everything from distribution, marketing, etc. Regulation is another key area of our work, and here our role is really to support central banks to build enabling regulatory frameworks. And finally, we have a new big initiative on interoperability, and the idea is to facilitate conversations between different mobile money providers in order to interconnect the different services, so you can send money from one wallet to another wallet. So this is very briefly a summary of what GSMA does in the area of mobile money. And you'll find that a lot of our resources are available online, so if you're interested, I encourage you to visit the website. We have a wealth of industry data that's public, publications, reports, articles, and for mobile money providers, we also prepare benchmarks so they can understand better how they perform compared to their peers globally. So this is what we do. If you want to find out more, please visit the website, and let's now talk about mobile money. We discussed this morning that mobile technology has represented a huge opportunity to advance financial inclusion in developing and emerging markets. So again, I think many different people have talked about this topic this morning. So we can move to the next slide already. Many of you will be familiar with M-Pesa. It's a mobile money service that was launched in Kenya by Safaricom, and it's a wonderful example of a successful mobile money service that has been rolled out at scale, and it's now being used by the majority of the population in Kenya. But it's not the only mobile money service, right? There are over 240 similar services in developing and emerging markets. So we're talking about an industry that's already really big, really at scale. And when we look at this graph, we can see that the growth is very impressive. We can also see that in the past year and a half, mobile money has significantly expanded outside of sub-Saharan Africa. So I think that's a very interesting story, especially for this conference. If we take the case of MENA, today only 6% of live mobile money services are in MENA. But if we consider planned deployments, the region accounts for 13% of all the planned deployments we are aware of. So we expect to see a lot of growth in the development of mobile money in MENA. 242 services. I think it's also important to note that most of them, when I say most, it's above 60%, are led by mobile network operators. So the operators today are really driving this industry. Why? They have unique assets to do this. They have widespread distribution networks that reach people at the bottom of the pyramid. So very important. They have trusted brands. And they also have a secure access channel. Also, more importantly, more often than banks and other traditional financial institutions, they are willing to invest into mobile money. So they make the financial investments. This is just another way of looking at the same data. So we look at it by country. That's a map of the world, and each country in dark red is a country where we have 2 or more mobile money services available. So the first thing that we see on this map is that mobile money is already available in most developing and emerging markets. Especially in sub-Saharan Africa, it's available in 36 of 47 countries. So the question is no longer about how can we make mobile money available? It's really how can we make it successful and scalable? So I think this is really the topic of this presentation. Mobile money is already available in many countries. Operators understand the benefits of rolling out these types of services now. How do we as an industry bring it to scale? The second point that we can see on this map is that there are already a lot of countries, 52, where there are 2 or more mobile money services available. And this really highlights the opportunity for interoperability, because most mobile money services today are closed loop. So you cannot send money from one scheme to the other without cashing out. It's not great from a customer experience perspective. It's not great for the operator because it could represent more revenues. So we're really at a turning point where interoperability is starting to become an interesting topic for the industry. But what we've seen is that it can only work and be successful if it's done at the right time, if operators choose the right technical solution to implement it and discuss business terms properly. So I think this is something we'll discuss more in the panel, but it's definitely one of the key trends that we are seeing in the industry today. I said earlier that operators are usually very willing to make investments into mobile money. Last year, we conducted a survey across mobile money providers, and we found that 70% were planning to increase their investments in mobile money this year. So yes, mobile money is growing, it's growing as a business, and it's becoming increasingly a strategic service for mobile money providers, for operators. So mobile money is available in most markets, right? How many people are using it? So this morning I gave you part of the answer. How many? In Egypt? How many in Egypt? Tens of thousands. So Egypt is it's very early days in this market. But if you remember the first graph with the list of mobile money services, we see that it started, a lot of services were launched in the past 3 or 4 years. So these services are starting to reach scale. And today, globally, we have over 200 million mobile money accounts. So that's a very big number. And to put it into perspective, in 9 markets, there are already more mobile money accounts than bank accounts. That's Cameroon, DRC, Gabon, Madagascar, Kenya, Tanzania, Uganda, Zimbabwe, and Zambia. It's very significant. It really shows the transformational power of mobile money in this region where the level of bankarization is very low, just like in Egypt. So we're talking about markets where less than 10–20% of the population has access to formal financial service. And in these countries, mobile money has brought access to financial inclusion to more people than the banking sector has ever managed to. So it's really transformational. So we've managed to open lots of accounts, millions of accounts in 89 countries. However, one of the main challenges that the industry is facing today is around making sure people are actually using the services once they have opened the account. So of the 203 million registered mobile money accounts, only 61 million had been used to do one transaction in the last 90 days. It's not that many, it's 1/3 of all the accounts. And if you look at the map, again, one of the things that strikes me is the gap, the difference between the number of active accounts and the number of registered accounts. And it's particularly an issue in MENA. It's the red bubble. So why does it happen? We know that the customer journey to mobile money is long and complex, especially in markets where transactions happen primarily in cash. It really requires a strong behavioral change from the customers to start using a wallet to make these types of payments. First, you need to be aware of it, then understand the benefits, start using it, and if you're satisfied, you'll try it again, use it again, and you'll become one of these 61 million active users. But today, we see that activating customers remains a major challenge in most markets and for a very large number of providers. So probably something that the Egyptian providers will have to deal with as they are now starting to roll out and build their customer base. It's not just about registering people. Registering people it's okay, it's not too difficult, but making sure they are actively using the service, engaging the customers, this is the real challenge. So we're now going to look at the product mix. So 61 million people globally are actively using mobile money. But what do they use it for? You can use mobile money to transfer money, to send money to a friend. You can use it to pay bills, to receive your salary, or other government-to-people transfers. You can use it to top up airtime. You can use it to make payments in-store or online. There are multiple use cases. During the months of June 2013, a total of 431 million mobile money transactions were conducted globally, worth $7.4 billion. So we're talking about a lot of transactions. And most of these transactions are airtime top-ups and domestic remittances. So these are the most popular use cases today in many markets. However, the fastest growing product last year was bulk payments. So it's paying salaries and making government-to-people transfers. This is where we see the strongest growth today. It's in the ecosystem. So mobile money, it's about building your customer base, building your distribution, but also having good partners so that you can leverage your ecosystem to make more payments. This slide is about distribution. This is something we've talked about a lot today. There was a panel earlier about agents, and it's one of the building blocks for mobile money. You need to have a distribution channel, agent outlets that allow unbanked and underbanked people to do the cash in and cash out in a convenient way. So mobile money providers are building agent networks outside of bank branches. And today, we counted 886,000 mobile money agent outlets globally. And if you look at this graph, you can see that it's more than the total number of bank branches globally. It's more than the total number of post offices. It's more than the total number of Western Union points of sale. And it's growing very fast. In a lot of countries where mobile money is available today, again, we have more mobile money agent outlets than bank branches. So these agents are becoming the face of financial services in these countries. Mobile money is really an effective complement of the traditional financial service distribution infrastructure. So really expanding access to more people, more underserved people. So I think I gave you all the key numbers, a lot of them. Again, more on the website if you want to find out more, if you love statistics. We have a lot to share. I think the key topic for this session was about failures and successes in mobile money. So what's the difference between M-Pesa and any mobile money service that's struggling to reach scale? It's a key question for us, and that's something we work on very seriously, trying to understand the best practices and the key success factors. So one of the analysis that we do is it's this. So it's mapping mobile money adoption, so that's the vertical axis, against the age of the service, which is the horizontal axis. And what we found a couple of years ago is that mobile money is a two-tier landscape. You have two groups of services. One group in red, growing very fast. Actually, even during the first year of launch, service was adopted quickly, customers started to use it, and they became one of these red lines. It was 14 services in 2012. 14 out of 180 something, all right? So all the other services are at the bottom, one of these blue lines, growing slowly, struggling to reach scale, struggling to create traction in the market. So we wanted to understand who are these red lines? What do they have in common? And how can we share this with other providers and make sure they adopt the same success factors? So we looked at the market conditions. We thought, maybe all these services operate in the same region, in similar types of market. Maybe there's one type of market in which mobile money succeeds. That's not really what we found. We found that sprinters operate in very diverse markets. Some in markets where GDP per capita is very high, some where it's very low. We tried all sorts of statistical correlations between performance, adoption, and mobile penetration, rural-urban splits. We found nothing. Very diverse markets. The only thing that made sense was regulation. Most of these sprinters, most of these fast-growing services are in markets where regulation is enabling. They are in markets where the central bank allows both banks and non-banks to provide the mobile money services. They are in markets where the central banks allows cash in and cash out outside of bank branches. So we found that these were very important key success factors, and that's a key area where a central bank can play a role if they want to make sure they have more sprinters in their markets. We also found that the sprinters share operational best practices. There are a few things that they all do in the same way, even if it's in very diverse markets. Distribution, again, very important. The keys to success are around making sure your agents have multiple ways of rebalancing so they can always have liquidity in the branch. It's active agent management, looking at the transactions, but also looking at the quality of service, looking at the branding, making sure the shops are all branded properly, that the tariff is on the wall very clearly positioned. It's all these different aspects. It's also marketing, and in terms of marketing, it's a lot about BTL, actually. ATL is great for raising awareness, but again, it will only help you register accounts. How do you activate them? A TV advertisement will not really help you to make sure your customers are using the service. So it's a lot about the BTL. Again, it's a lot about using your agents on the ground or people in the field who will help customers make transactions and understand the value of the service. It's also about focus. It's focusing on 1-2 use cases maximum at the beginning, making sure people get it, and then enriching the product offering with more use cases, more scenarios. The last box at the bottom is about investments, and I think that's probably one of the main things, one of the main key success factors, and something we'll discuss in the panel. Mobile money is not about immediate return on investment. It can create a lot of benefits in terms of revenues, in terms of financial inclusion, but you have to be patient. And hopefully your management will understand that, and they need to have a long-term vision. So that's very important. CEO commitment, And you can see that in a few different ways. It means that you have a separate business unit for mobile money, so you have a lot of focus, resources dedicated to this service. The head of mobile money reports to the CEO. It's all these different things. If we look at these sprinters, the lines in red, we found that most of them have broken even, which is great. But in most cases, it was after 2 years of operations. So 2 years to break even, and we're talking about the fastest growing services, right? So I'm not talking about the blue lines. I'm talking about the successful, fast growing deployments. You know, it takes on average 2 years to break even. So you need to be very conscious of that, making sure your investments are in line with the fact that mobile money is an OPEX business, and yeah, securing CEO commitment. So that was in 2012. The landscape was quite easy to understand. There were two very distinct groups of services. When we looked at the landscape in 2013, it was slightly different. There were more lines, so more mobile money services. Luckily, more fast-growing services, which was a very good sign. I don't know if you can see it on the slide, but we also identified a new group of services in the middle, who are not growing as fast as the sprinters, but still, they're making faster progress than the slow-growing deployments. And a lot of these services in the middle are actually services that were relaunched. So they had been launched a first time, became one of these blue lines, growing very slowly. And then the service was completely revamped with a new strategy, with a new distribution system. And they are starting to reap the benefits of that. So that was also very encouraging. And the final point on this graph is that we identified services that had been previously growing very slow, but last year, mobile money started to take off. It was adopted. And these turnaround stories are very important for the industry because it really shows that even if you struggle at the beginning, you can still become successful in mobile money if you make the right choices, if the regulation is in place, and if you follow the best practices that I mentioned briefly. We're very lucky today because in the panel, we have actually people who can tell us about one of these turnaround stories. We have people from Côte d'Ivoire, we have Thierry from Orange, and also George from Etisalat, who can tell us a bit more about this market. It's one of these red lines, and I think it's one of the stories that we should all be aware of in terms of mobile money. On that note, I'd like to invite all the panelists on stage so we can start the discussion. Thank you.
Thank you very much, Claire. That has been quite the informative presentation. On stage, we have a panel discussion regarding the failures and success in mobile money. Our panelists will be Mr. Abhishek Sinha from Echo India, Mr. Thierry Millet from Orange, Ms. Margaret Bialas from IFC, Mr. George Held from Etisalat Group, and Ms. Yos Tahir from Vodafone, and moderated by Claire Pennicoud.
Is it? Yeah. Great. This will save my voice. So my first questions will be for Thierry, because I just mentioned Côte d'Ivoire. I think it's a fascinating story. And Thierry, if you can tell us a bit more about your experience in this market and in other markets where Orange Money has made success, I think it would be very interesting for all of us.
Okay, thank you, Claire. In fact, I prepared 3 slides, and I'm going to show them.
Perfect.
This is just to illustrate. So before we go into the panel, I just wanted, in our case, to illustrate some of the elements that Claire just covered. So for the Orange Group, as you can see today, we have launched mobile money programs in 13 countries. Personally, I took the leadership for our group of the development of these activities 3 years ago. And what is very interesting, so you see the first country we launched was Côte d'Ivoire in December 2008. And this is when I took this job, let's say in the summer of 2011, in fact, we were starting to go to scale in Madagascar, which is a smaller economy, where we had launched in September 2010. And if you take what has happened in these 3 years, so first of all, today, we consider that we are going to scale in 4 countries. So in 3 years, we have moved from virtually no country where, having started the program, we were really successful, to 4 countries. So what do we call successful? I think, of course, we cannot give numbers, but let's say what we need is to compare, let's say, the number, how large is our active base of customers. That means customers who put money on their accounts or take money out of it, and to compare that to, let's say, the top 5 banks on the B2C market and how large are their base. And so we consider that when we are at least in the top 5, we are at scale. And to be honest, in some cases, we are above the number 1 position as of today. So the first thing I wanted to comment back on Claire is that it's an evolving story. I could comment Côte d'Ivoire, which is the biggest development, but in fact, in 3 years, I lived that we went with 1 success story, 2 success stories, 3 success stories, 4 success stories, and right now my job is to move to 6. And I also want to comment to you that this list is not over. We're going to go in other geographies. We have new launches, let's say, being prepared. When you saw the world map with virtually nothing in Europe, let's say, we have looks at what could be done in Europe, because there are some places in Europe where there is a potential for that. I wanted also, and then I'll answer, let's say, Claire's question in the end. There are 3 bricks, 3 fundamental, let's say, proposition for the customer. The first one is that you own an account, okay, which is especially strong for people who did not own an account. So this is why we always say that fundamentally the potential of the market in mobile money is in countries where the penetration of banking is quite low, and most of the case around 10%, like it is in Egypt. Then you have the use cases around transfer, and you have some cases around payments. And this is just in 2013, some achievements which we shared with the country on, let's say, specialized services which we built. So you can see, for example, that in payment, we did a partnership with Canal+ throughout Africa to pay prepaid TV. We did also a partnership with a Visa in Botswana to have a debit card running on the electronic money account. We had a mobile ticketing project in Niger, university payment fees in Cameroon. So it's very important for mobile money to state that on one hand, to start, it really, let's say, addresses fundamental use cases and fundamental needs from the population. On the other hand, it's also a very dynamic ecosystem, and innovation is going. It's very important for the success, and it's a testimony of success that when mobile money is running, I mean, new services are coming every day. And to give, let's say, actuality, just yesterday, yesterday we did an announcement corporate for a bank to wallet transfer. So you can transfer from a BNP Paribas bank account to an Orange Money wallet. You can transfer money from your account to your wallet and back from your wallet to your account. And also yesterday we launched in Dakar. In Dakar there is a new highway section, okay, where there is less traffic, and where there is a toll to pay, and we announce that you can reload your pass if you take the highway from your Orange Money account. And this is a premiere, so this is quite sophisticated service. But you could see in Senegal, where, let's say, 1 year ago, you could consider we were struggling to take the market to scale. We have moved fast enough to be, let's say, very significant, both in volume of payment in the market and also in services. And the last point, so this I will be very short on that. I will not go one per one because I've probably already exceeded my time. But I want to re-emphasize also to all of you, it's an entrepreneurial and partnership issue, okay? So this is something which shows, you see paying gasoline at Total station. You see the launch of the partnership with Visa. We started to do international money transfer in the UMOA zone because it's a zone run by one unique central bank and with no currency and a favorable regulation to that. So it's also a story where the development comes from multiple services and also an entrepreneurial spirit which has to be incarnated by the people in the country, the business leaders, and also it works in the end when all actors decide to work in partnership all together to run this. And for this, I'm very happy, as a conclusion also, to salute the fact that we have this partnership with Fori, and I know that we will launch the service and start on Thursday, and thank you very much for that.
Thank you, Thierry. Orange obviously has a wealth of experience in mobile money, so thanks for sharing a little bit of this in your presentation. We learn a lot from these success stories, that's great, but sometimes we also learn from failures, and the lessons can be just as insightful. So when I got in touch with the panelists to prepare for this session, Margaret, who works for the IFC, told me that they had learned a lot through success stories, obviously, but also through overcoming some of the challenges of mobile money. So Margaret, if you're willing to speak about this now. Thank you. Do you have a presentation?
I do. I can do it without as well.
As you wish.
Seeing there's a lot of data facts, and maybe I will use the slides. I want to share with you a story of a payment service provider in Georgia that we work with. Now, Georgia is a reasonably small country in the Caucasus. It has about 4 million inhabitants. It's not a very big place, so it doesn't seem to be terribly intuitive that you want to do mobile financial services there, but there was a payment service provider who seemed to have all the right ingredients to make it work. And they said, we have a bank population or an urban population to whom bill payments is a real pain. It takes a long time, and they have to wait forever in the branches, and in rural areas it's really hard to access. So it sounded like they'd figured out some sort of a value proposition, right? The payment service provider was managed and owned by a company called Open Revolution. They set up a venture in Georgia called MobiPay that operated in partnership with local merchants, financial institutions, mobile network operators. They had the buy-in of the government. They were funded by venture capitalists out of the US. They had worked with a South African outfit to build the IT and the back-end platform to make it happen, and they'd entered into an exclusive partnership with one of the mobile network operators who had about a 50% market share. So that sounded like not a bad point to start off from. They had a pretty professional management, a lot of whom came out of cards. Like the CEO had worked with Amex for 30 years. The marketing director came out of the card division in a Turkish bank and had built up that. Visa, the guy who headed up the IT came from Visa and kind of knew a lot about that. The guy who was looking after the merchant networks had worked for an M&O in distribution for 15 years. So it sounded like a really good story. Right? They were going to be the first payment network in Georgia. They said, we are convenient, we're instant, it's e-money, it's easy. We tailor our solution to what the different banks need. They had approached the top 8 banks that together held about 75% market share. And said, we're going to really help you expand footprint. They launched in February 2010. By September 2011, they had 120,000 customers. For a country that has 4 million people, of which maybe half are bankable, that's not such a bad deal. And they were looking at having 400,000 odd about a year later. And then their story was, it's convenient, you can use the money quickly, it's going to be secure, your fees are less if you use this as a merchant pay, so you pay your restaurant bill or your purchase in a shop. It's still the merchant that pays, but to the merchant the value proposition was, well, you pay 1%, while if you use Visa, MasterCard, Amex, you use somewhere in the range of 3 to 6. To the consumer, there was no fee other than a cash-out fee. So, and there were loyalty programs that were incorporated into this. The way that they were going to drive uptake was through working with their merchants on getting bonuses. So you go use MobiPay to pay for your dinner bill, you'll be paying 5% less. So clearly that's a good value proposition. No? And then they thought about what is it that we bring to the banks, what is it that we bring to the mobile network operator. So the story seemed really good. They were looking at really going big in terms of agent networks and merchant acceptance points, so they had a dual strategy. It was not only about cash in, cash out, it was also about really paying digital at merchant location. And then it all went pear-shaped. So by June 2012, this company that in May 2011 had already acquired about 200,000 customers went bankrupt. They didn't call it bankrupt, they suspended services temporarily. I believe they're still suspended today, so I guess it's a more permanent type of suspension. The official version was the key sponsor became ill, the family pulled all the money out of the company, they had no more money, they didn't generate a profit yet, sort of a year and a half or so into business. So until they found further capital, that was the end of that. So what we did is we did what we called a post-mortem. We sent in a team, said we really want to understand now what's gone wrong. So this is really closed. We're not harming anybody by looking hard and deep what actually the issues were. And we found a couple of things. They changed their strategy about a year into operation. They diluted their operational focus. Their whole market incentives failed and became something very perverse. They became a competitor to what was supposed to be their clients, which probably was one of their worst mistakes. So there were a whole lot of things that had really gone wrong. In terms of strategy, they had gone to the banks and said, we want to be your backhand, we'll be your engine and you ride us and we provide the rails. The banks were kind of saying, okay, but then we want to continue to own the customer. Sadly, they did not own the source code to the IT solution they'd written. They owned the IT, but not the source code, and the owner of the source code refused to make that change. So they could never actually go to the banks who were supposed to be their customers and say, you retain ownership of the customer, we are just the engine that enables your service. So they decided we'll demonstrate that we are not actually so bad, that we have a value proposition to you banks. And the result of that demonstration was they were so good that the banks saw them as a serious threat and a serious competition. So they lost their customer base. They changed the operational focus, and initially it was very much about being urban, serving urban customers, making their life easier in terms of bill pay. They then said, okay, we'll do rural also. We'll help rural people for whom it takes about an hour or so to get to the nearest branch to make these payments that they want to make. Now, they hadn't quite figured out the urban bit and then started stretching their resources into another second business model. So they just didn't have the manpower and the resources to sustain basically two completely businesses who only shared one IT solution. They used marketing to open accounts, and they had an incentive scheme for what they thought was going to drive consumer uptake by giving discounts, getting their merchants that they worked with to give discounts if people used MobiPay rather than cash or card. Now, instead of driving uptake on a regular basis, what happened is the agents that were trying to promote MobiPay went to somebody and said, you know, if you pay for those Levi's with MobiPay, you'll get them at 20% less. So these people said, of course, I'll do that. I'll open an account with you right now. Thank you very much. The pilots got the money. They were the greatest provider of cash-in at the agents. The people went, bought their Levi's at a 20% discount and never used the service again. So somehow the marketing didn't work quite the way it should have. And that affected the value proposition to the agents, because the agents who were supposed to get fees from transacting on cash in, cash out didn't really have any regular cash in, cash out business, right? So the entire value proposition to the agent broke down, as did the value proposition to the merchant, because the merchants basically lost money every time somebody used MobiPay, because they wouldn't use it beyond any discounted services. In terms of value proposition to the customer, the core value was really to provide a convenient way to pay. But somehow that never really took place. It became actually more inconvenient because you had to pay, and the only reason you did that was to get the discount, and not really because there was a clear service proposition. It wasn't the most convenient, most easy way to pay your restaurant bill, to pay your utility bill, etc. Because the urban people typically would have access to internet banking, and guess what? They used that to pay their utility. The IT system I mentioned, they couldn't actually modify to fit the need of their core clients, the banks. So they became a competitor through demonstration. And then there was the relationship with the MNO, 50% market share. Sounded like a great story, right? All of a sudden you get 1.5 million customers that you gain access to, that you can sell your solution to, except that about 50% of those were unemployed. So that turned out to be a bit of a problem. And there was very little support that the MNO actually provided. So it wasn't a partnership where both partners worked together towards a common objective. It was somewhat of a free rider element. You know, if you show us this works and you actually manage to acquire customers, yep, we'll switch them to our phone, to GeoCell, and the mobile network operator saw the payment service provider as an acquisition strategy for greater market share. And that didn't really work out so well. So what do we take away from that? Given so much went wrong and something that looked so perfect to start off with, making sure that partners are really well aligned and that they have the same interests, work towards a common goal, is critical. And in partnership, it means everybody needs to have a takeaway, has to make a profit, has to have a benefit somewhere along the line. An e-wallet can potentially be a high risk to a payment service provider if that's sort of not a clearly thought through value proposition. You need a balance expansion with actually organic growth and making sure you grow your core business before you move off into new markets. You need to have a very clearly defined value proposition and a very narrow target market at launch. And you need to really understand what motivates the agent channel, what works for them, and what their motivations and needs are. You want to locate your management in country because that was part of the problem of MobiPay. All of these fabulous managers with 20, 30, 40 years experience in the payments industry were not actually physically located in Tiflis. They were based in Washington, in Istanbul, and all over the place, and they had no clue what was happening in the country and in their business. And then on IT, you really want to be sure you actually own every bit and you can manipulate what your customers need you to manipulate. And then lastly, if you do have to close shop, exit gracefully, don't suspend indefinitely.
Thank you, Margaret. It was a great story, very insightful. One of the things you mentioned as a learning is the need to find what motivates your agents and your channel, and that's very important. That's definitely one of the key success factors in mobile money. Abhishek, you're a bit far from me, but if you could come closer and tell us a bit more about ECO and the work that you do, especially around distribution. I think it would be very interesting. Thank you.
Good afternoon. So ECO is a mobile money network in India. We are a bank-led model in the country, and which means that that we work on one side we partner with banks, and on the other side we have created the agent network, and we are the intermediary who takes the bank's product to the customers. So you can walk into our agent locations, open a bank account for yourself. These are absolutely insurance-bearing, deposit insurance and interest-bearing bank accounts. And you can use, at those agent locations, you can do cash in, cash out, money transfer transactions, and a few payment transactions as well. The agent and the customer both use their cell phones. So the customer uses the cell phone as their debit card, and the agent uses the cell phone as the point of sale terminal. One unique thing about Echo's solution is that we work across MNOs and across MNOs, across devices. And what we did is that we enabled financial transactions on just dialing of numbers. So there are no apps, no downloads on the SIM or the phone. And financial transactions are just like dialing of numbers. And we have a unique two-factor authentication mechanism which helps in securing the transaction. To talk about success and failures, I don't personally qualify Echo as a success as yet, though we have been in business for now 6 years plus. And as I mentioned in the first session, we ran out of money 4 times in the very first 4 years of this company. So it has been initially a tough journey. Though I guess I claim that, and we are still there. So the intellectual property which we have really truly created is that of our mistakes. And to talk specifically about agent, so in the first session, Margaret spoke and gave us a formula for success. Maybe that was an investor's perspective. I'll give you a formula for success based on all the mistakes we have done in the last 6 years, with quite a lot of overlaps with what she had. And I'll spend a couple of minutes on each. First is infrastructure and connectivity. So even before we get to the first, I think one needs to start from customer centricity. The design of the service has to be completely centered around the customer. In Echo, we initially very briefly thought about the customer, but then we said agent is probably the center of the universe, and we centered things around agents. And it is almost after 5 years that we are going back and saying that was not the right thing to do. We should have been a lot more customer-centric in our design and should have advocated for customer centricity even from the partners with whom we engage, largely the banks. So customer centricity is really fundamental. The checklist, my first point is around infrastructure and connectivity. It's not around regulations because for an entrepreneur and an enterprise, regulations are given. So you try and figure out solutions with whatever regulations are there. So infrastructure and connectivity to ensure that the customer to whom the service is being extended is a mainstream customer right on day one. Because if you think of customer centricity, you will never say interoperability will happen when the time is right, because you will start with interoperability. You know, it's very easy to conclude that customers don't need interoperability because they are low-income customers, rural customers, they only have 5 people to transact with, hence no interoperability. The second is product and pricing. In Echo's case, the product is that of the bank, but the user experience is Echo's. And here, we worked really well. We came out with this unique user interface which made it immediately universal. And we ensured that the time and motion of the transaction was equivalent to time and motion of the other transactions which were taking place at that retail store. And that truly helped in adoption of the service. But product and pricing, so construct of the product, the experience of the product, and the pricing has to be absolutely right for the end consumer. I will talk about the gaps which we have. In India, the first account which you open is a zero balance account. But there are no incentives. And then the next account is a 1,000 or a 5,000 rupee account. So it's a huge jump from 0 to almost like $100. And we don't have intermediary products of, say, 20 cents, 40 cents, half a dollar kind of bank accounts. If those product innovations would have been done, then it becomes a lot more relevant for the customer. Plus, not all mechanisms of money coming in and money coming out was enabled, especially electronic. The accounts were more like an island. So the customers couldn't transact with other banked customers. The third is unit economics. For the first 4 years, we truly struggled with getting the unit economics right. Eventually, the bank had to agree, the regulator had to agree, and they introduced pricing for the customers, and that's when the unit economics started to work. The fourth is awareness. While Claire spoke about ATL and BTL, unfortunately in India, while ECHO does invest in BTL, and primarily the messaging which we try to give to the customers are principally two. One is legitimacy of the service. The second is availability of the service in their area with product information. But it would have been great if the banks would have supported us with above-the-line campaign to establish the legitimacy of this alternate channel. That would have filled this crack. Fifth is timely payment of commission. This was not there in Margaret's checklist, but this is a must checklist for all digital financial service providers or mobile money providers. In 2011, our banks, we had receivables of up to $1 million. We almost came to a standstill. We just couldn't operate because it is about money, it is about rotation of cash. If the banks are not going to pay us, and we were continually paying the commission to the agents, we ran out of money, and soon we stopped paying them. And this is about, so State Bank of India, which is our largest partner today pays us in real time, while the other three banks with whom we work, they don't. And this was such a significant change for us because 90% of our business now comes from State Bank of India simply because they pay us in time. And we are able to pay the agents in time. It helps in running a very well-oiled system. Sixth is an environment to scale. Here we are dependent on the banks. India is a bank-led model. Unfortunately, being bank-led also makes us operationally dependent on the banks. So every time I have to open an agent location, I have to seek approval of the banks. That's not a very straightforward process, and hence my destiny lies more with the banks than with me and my team. And seventh is regulations. I think clearly we need to move away from feudal, patronizing regulations to a lot more principle-based regulations. Can I take a minute? To talk about agent, one big learning which we had is that their earning is key. Their absolute earning is key. And we 2 years ago made this choice not to move ahead with spray and pray model. And we invested a lot in catchment planning where we use tools like Google Maps, GPS to geotag our locations, our catchment. And we do very thorough catchment planning, which is truly intersections of where, in our case, the primary service is domestic money transfer. So we look out for places where migrants are living, working, their transit locations. And it is the intersections of some of these where we put our agents. So we went from an average of $50 of income to saying that we will be the highest revenue generating partner for our agents. And today about 20% of our agent base, we are the highest, where we are doing, where they earn in excess of $200 from ECHO every month apart from all the other services which they do. And this truly helped us. This helped in increased leverage. This helped us in better training, better layout of the shop. We could influence a lot because now we didn't want to lose them, neither did they wanted to lose a chunk of their income to go away. So there was increased leverage from both ends, and that truly helped us. We're only 20% of the base is earning where we are the highest revenue generating partner, but we are continually working towards that. Thank you so much.
Thanks, Abhishek. I think it's, can you hear me? It's a very good point about the agent profitability. If they don't see that the service is profitable for them, you can't really expect them to promote it and to spend the time to educate the customers about it. So we've talked about distribution, we've heard a little bit about product offering, about marketing. We've heard insights from India, Georgia, Sub-Saharan Africa. But let's settle for a little while in Egypt. Yes, sir, can you tell us a bit more about the opportunities and barriers in Egypt that you see for mobile money? You manage Vodafone Cash, so what do you think this market will look like in a few years?
Well, I want to start with what you just mentioned in the previous presentation, in your presentation, about the sprinters and the markets that really make it first year just like that, and other that struggle a bit but still can succeed. So I think we can categorize these markets, the deployments, in two categories, the ones that are successful. First ones are those who are deployed in markets that had burning needs for mobile money, like Kenya, for example, where there was no way to send money home before M-Pesa, or like the first one that had 500,000 customers in the first month. It was, I think it was, and correct me if I'm wrong, it was because of a severe devaluation in their currency, and then we were just exchanging with the US dollars and couldn't have anything less than a $5 note to trade with. So the solution was with the mobile money. So other markets can still have the opportunity and still grow and still can be success stories, but will just take some time just to identify the opportunity in the market and have the adequate regulation to support that. So from what we're seeing, Egypt is one of those markets, and we know that we have a lot of opportunities that lie in the Egyptian market, which I'm gonna now discuss with you. And the first thing is, well, most of the Egyptian population is unbanked, so the number can still vary. Is it over 80% of the population, over 90% of the population? But the fact remains that almost more than half of the population is unbanked. So what can we offer for those unbanked people? The first thing was to actually try and automate and facilitate the saving groups that they're having within each other, which was, for instance, the Gamaiya, the lending models that they have within with each other in groups that completely informal. Next thing is to actually make it easier to send money to their relatives and to their loved ones. They live among different governorates and stuff. But also, we also have the opportunity to actually create new financial products for the bottom of the pyramids, like what happened in Empower, for instance, in Tanzania, and in Mshwari for Kenya. Those customers who were absolutely not reachable for the banking sector were able to get reached with the mobile money. So customers can still deposit as little as they can in their virtual wallet and can take interest for this amount that they have. So like micro saving accounts, and after that they can have micro credits based on what they have on their wallets. So that's I think, the first opportunity. That's the most obvious one, but we also have different opportunities. For instance, we can name the merchant payment. Now we have large network of merchants that is, again, not reached yet with the big aggregators for payments. These can be reached through mobile money, and this, again, we've seen this happening in Kenya, in Tanzania, in Pakistan, and in various deployments. So what mobile money can offer for these merchants is actually to expand the reach for the customers. They can themselves collect the money from their customers, send it back to other suppliers and pay their dues, and keep the money in the system virtually with absolutely no cash. And the third opportunity will lie in the corporate world and in the businesses. So again, imagine if with one click of a button, customers or employers can pay their salaries, disperse their salaries, pension for the government, the pension, and even collect their money just with some click. Especially, this would be valid for the corporates and the enterprise owners that have businesses with with a big number of workers spread among the governorates, and, for example, the constructor workers. These can really this product can really help them reach what they want. Another example for the opportunity would be the MFI, microfinance institution, and the debt collection agencies. We know that there is a big market in Egypt for these MFIs, and we know that the most difficult thing after they pay the loans for their customers is to actually is to collect the installments for these loans. This is the major cost that they endure. So now with the mobile money, what they can do is to actually just using their mobile, they can still pay their installments, eliminating most of the costs, and then they can offer more attractive loans with lower interest rate for the less privileged people. And the final opportunity would be, of course, the international money transfer, the international remittances. This is a big portion of our GDP. The last estimate was that it has increased from 5% to 6%. Sorry, to 6% of our GDP. The last number again was that last year we've received 23.6 billion USD in Egypt from the international remittances. So again, with all the regulation in place, which will be a futuristic thing, with the interoperability, the regulations and everything, this can be a really big thing. We'll have a lot of players, and everybody will really benefit from that. So I think that's about the most obvious opportunities for the mobile money. And about the obstacles that you mentioned, I'd like to say that they're not really obstacles, but I'd like to call them more dependencies for this to work. So the first thing, of course, would be the regulation. So in order to introduce new products and introduce new opportunities, we need to have the regulation bodies that really support and push for these products to launch and to get to life. The other thing would be the financial institutions and the banks. They need to really believe, they need to offer the new products to push for actually reaching the bottom of the pyramids. They need to want that and work for that. So the MNO can't work for that. MNOs can't work for that on their own. And also the agent networks, how willing they are to engage in that, how ready they are in engaging actually in this process. The last thing, which actually that you mentioned, is the MNOs themselves, because if anybody here is working for an operator, we know that the day we launch any product, we expect the next day to see the results. So if the reports are not working same day, it's a catastrophe for us. So we need to really, so we launched this today and we expect, so what's the impact on the revenue? What's the impact on the ARPU? How many customers did we retain? And the mobile money is a completely different product. It's a really long-term investment. It needs patience, it needs involvement and engagement from the management team, from everybody within the organization, and it needs continuous work and support, and actually to wait for the results to come later, which is something that operators are not used to. So to have this mindset, this shift in the mindset in the operators and support the mobile money, I think this is a key factor. So in a nutshell, we have all the opportunities we need here in Egypt with the adequate support from regulations, from the MNOs and from the banks. We can easily be one of the sprinters really soon.
Thanks for sharing your perspectives. Very interesting. And you mentioned merchant payments, international remittances, corporate payments. To make these products successful, you really need to have a strong ecosystem of companies, of stakeholders that are connected to your mobile money platform. George, do you see the same opportunities in Egypt? You're the VP of Commerce at Etisalat Group, also involved in Egypt as well as in other markets. So do you see the same opportunities in Egypt, and what have you learned from experiences? I will allow you 1 minute.
It's very difficult to speak when you're sitting, and trust me, it's going to be no death by PowerPoint here. As Etisalat, we're trying to influence this, and I'm sure you noticed the dress color of our hostess are perfectly in line with our brand. But on a serious note, Etisalat, as you're probably aware, we operate in 21 countries around Africa, Middle East, and Asia, and we don't do mobile money. Let me repeat it. We don't believe in mobile money. We don't do mobile money. And the reason is because we don't believe that anybody who wakes up in the morning, first thing he wants to do is to go and pay for something. He wants to have his normal life, give his normal activities, and the payment is just one of the small activities of his life experience. Obviously, this is very contrary to what we people in the payment industries think about. So in Etisalat, we're doing connected commerce. Commerce to enable life of the people. And the portfolio of the services which we offer in Etisalat across of our footprint, and we're actually offering it in 20 countries right now, outside of Sudan, which makes our colleagues in MasterCard very happy. It's very, very diverse, from the ability to pay in the metro and the buses and water taxi in Dubai with your mobile phone and NFC. We keep playing a key role in the Sheikh Mohammed Smart Government Program in UAE, when every time you come into Dubai and paying your visa fees, it actually goes through Etisalat, through our payment gateway. We process very substantial portion of governmental payments. To community savings account, which we run in West Africa for women enablement program, we call it VINA, also in lots of Francophone countries, to life insurance, which we just launched yesterday in Nigeria, to mobile baby, to our mobile health initiative across majority of the footprint. We believe that connected commerce is the foundation for what the company can actually do. And for this one, we've been recognized by GSMA. Many times we received the best mobile money for unbanked. Still, we hate the word mobile money. And we are one of the leading organizations in GSMA for interoperability. And we recently received also recognition from IFC for technology and sustainable finance. We in Etisalat believe that there are two elements on the magic formula to launching connected commerce successfully and maintaining it successfully. And we have a really good proof of this one. One is interoperability. Because when you talk about the consumer, you talk about the merchant. Merchant is not interesting to sign with 5 different schemes. So actually, all closed loops are schemes. With the different schemes, every time customer comes to him to ask him what kind of mobile phone he is using, is it Orange, it's Voda, MTN, or whatever it is. He just wants to use the service because this is a part of his life enablement. So interoperability is given. And Etisalat, we already launched a number of interoperable products. For example, Sri Lanka, fully live on full interoperability. Pakistan on full interoperability. Tanzania is in full interoperability. Allow me to say this in front of Vodafone. All operators in Tanzania are fully interoperable with exception for Vodafone. Egypt is a great example, where from the beginning, together with our friends Fawry, NBE, and MasterCard, from day one, the system was designed to be interoperable in order not to discriminate the customers. And the key word is discrimination. I'm sorry, maybe it sounds very socialistic, but we don't want to discriminate people just because they happen to be having a telephone with Etisalat or because they have a bank account with other bank. It's all for the all people. And in GSM world, we all learned it long time ago. When you're interoperable, when you can call from one GSM network to another, your customer base growth, it's given. Why do we need to prove to the whole world that yes, we need to be able to send SMSs from Etisalat to Voda? It's given. So the same with money. Financial services needs to be interoperable, and we see the fantastic results. In Pakistan, our volume of transaction, as soon as we open interoperability, increased by 3-folds. In Sri Lanka, in 4-folds in first 2 months. It's given. We saw it in GSM world, it's given, it works the same in financial world. It doesn't even need to be proven. So for us, this is one key element of the magic formula. Another magic formula is connected commerce is not only about issuing piece, and we always think about whatever MNOs are doing, it's all issued. Creating mobile wallet, having companion cards, having paired card, having schemes linked to this one, companions, all this stuff. Issuing is a very important piece. Issuing cannot work alone as long as you don't have acquiring. And when acquiring and issuing works together, this is a magic formula. And that's why from us, from Etisalat, we're running all our payment gateways to enable enabling, to ensure that enablement of transactions at both online and the physical world actually exist. And that's why we're so fortunate that in Egypt, Fawry is doing a fantastic job in creating a phenomenal acceptance network for the services. And those are two main messages. If we're all going to have full interoperability and if we're all going to build very elegant acceptance network, skies are the limit in Egypt. This is a new country, fresh country. We don't need to repeat all the mistakes which we had done as 260 plus deployments. Just look around. We all know what it is. Join fully interoperable service. Jump on those merchants so it makes people life to be seamless and elegant. And this makes the full success of connected commerce. And I stress the word connected commerce here in Egypt. Thank you.
Thanks, George. You're very enthusiastic about interoperability. That's great. I have a question now back to Thierry. Mobinil is also doing mobile money in Egypt. What do you think are the key considerations that we should take into account if we want to build successful interoperable solutions in this country?
Well, I think interoperability is on the collective agenda. It was presented in your slides. There is a collective work by operators, and I meet George in London in some of these meetings. However, if you allow me to step back, I also run another GSMA program about digital commerce and on NFC solutions, and I often made the joke, which is in interoperable, there is inter and operable. And I said, look, inter is very nice, but let's also make sure we make it operable. And for sure, we can make things interoperable, and we will together. But I think it's very important because this is really, it's a strong move. It will ultimately affect millions of customers, millions of citizens. We have huge numbers. And what is important in this market for us is to build the fundamental and the pillars right. So it's to build trust, it's to build simplicity, because let's not forget that the fundamental expectation from anyone to mobile and what made its success, from the basic, Nokia black and white, to the latest over-the-top application, it's simplicity to use. So we need to deliver that. Simplicity, trust, reliability, on fundamental services for which there is a need for the population to use it. And then, when this is built, all the rest, interoperability, advanced services, some of the examples which were given by both my colleagues, some of the things which were in our achievements in 2013, everything will come, okay? This is just to say that, of course, it needs to be a push. Regulation needs to give support for that to happen. The momentum which will come around this product has to be, let's say, made enable to breathe. But however, what is the most important at the beginning is to build the right fundamentals. And these fundamentals are about simplicity, reliability, and trust. Therefore, we think that it's important to keep the things simple at the beginning and to deliver well and to deliver also massively through distribution.
Thank you, Thierry. I would have many more questions to each of you if I had more time, but I can already see hands at the back of the room, so let's now take some time for Q&A. Can you take questions from the audience?
Regarding the regulations in Egypt, actually, it enforces interoperability. So I'm a little bit. The issue is that the central bank is just easing such requirements right now. So we are not trying to enforce the interoperability while the banks have not yet. The operators and the banks did not yet. Got enough number of consumers or users. So, but it's a matter of can say few months in order to start working interoperable between all operators. It's just a comment.
Hello? Can I?
Sure. And can you please introduce yourself?
Yes, Guido Reniero of Intesa Sanpaolo. So I would like to ask you something, seeing that you have quite a wide experience on the topic. If you saw any good experiences of integrations among mobile operator and banks, because looking at the competition, generally speaking, worldwide, what I saw is in several cases we have, let's say, fully fledged mobile operator, mobile wallets that are mostly just mobile wallets, or some services that are much more bank-oriented, like Standard Chartered in South Africa, or like Philippine cases where the integration with mobile is at the end instrumental, very limited. Did you see any cases of good integration of these two worlds?
Yeah, that's a good question, and I can give a short answer and then give the mic to my colleagues.
In UAE, 27 banks, all major banks, are fully integrating with Etisalat. That's one of the examples. In West Africa, Bank Atlantic, which operates across majority of West African operations, is seamlessly integrated with Etisalat. So it is lots of work. There are industry standards. There's lots of ISO. There are lots of CDD requirements. But there are a number of cases, and I'll be more than happy to share with you in details offline.
Thank you.
Maybe just to add to that, I actually think that the distinction we started in the early days between so-called MNO-led and bank-led has not been very helpful to the general financial inclusion agenda and to the advance of digital financial services generally, right? Because that seems to suggest it has to be either or, and I think that's not true. You can be a mobile network operator and you can offer a payment solution, but the minute you want to go into fuller financial services, there has to be a bank in the game anywhere. And for a bank to develop alternative delivery channels using mobile, without a mobile network operator, it's not going to happen, right? So I think it's a question of the degree of partnership. And there are many, many different forms of partnership, and they can have a different depth. And in our experience is what has sort of led the discussion into MNO-led and bank-led has, on the one hand, been a regulatory distinction, but more importantly, it's been very much a case of who owns the customer and a fight around revenue on the actual transaction channel. And guess what? You're not going to make any money on the transaction channel, really, right? If you're a bank or mobile network operator, your core revenue comes from your core business, so it's not even worth fighting about how you're going to share those 10 cents, whether it'll be shared 80-20, 50-50, 40-60, whatever. And I think once we move over and above that discussion and think about its different forms of partnerships, we'll actually come to some form of integration.
Yeah, and actually a lot of mobile money services in the world are trying to bridge the gap between banked people and unbanked people. So it's not that you have a service that just for unbanked people and then mobile banking for people who have bank accounts. It's a lot about bridging the gap between these two groups of customers. And you ask for example, I'll give you one very quickly. It's the case of Econet Zimbabwe. So Econet launched a mobile money service called EcoCash, one of the sprinters actually. Very quickly, within the first year, they had over 1 million active users. Very impressive. And the fastest growing segment for them, the fastest growing product, was actually the transfers between the bank accounts and the mobile money accounts, which is something Thierry mentioned as well as something that they are enabling in some markets. So we see that successful mobile money services actually rely on the assets of both the banks and the MNOs. Then who plays what role in the value chain is something that the bank and the MNO are best positioned to decide. So I hope it answers your question. There is another question at the front, if we can bring him a microphone.
Okay. My actually concern that the process of registration, from my point of view here in Egypt, is treating the registration for a mobile wallet is almost equivalent to having a credit card, which is, from my point of view, is not the right thing to do, because I can limit the business related to wallet to low value and enable the registration for those accounts to taste how they can use it and how they can benefit from the service, then request the customer to fill more details and submit more paper to raise the bar or the limit of the account. I'm saying that because I asked many people for the services available in Egypt now for the mobile wallet, and most of them, they did not try it because of the complexity they are facing to apply, meaning that they have to go to a bank or to a branch of the operator, fill the forms again if he has already an account with the operator and he has already submitted the national ID and the information why he needs to fill another form and all of this. I don't know, with respect to the successful countries who have built a ramp of growth, were they considering quick adoption of the mobile wallet and easing up the registration process, or they treated everybody the same way?
Yeah, that's also a very important point. When we talk to the sprinters, we also found that very quick and seamless registration is a key to success. It's being able to register easily with not a lot of paperwork and being able to activate the account almost instantly. All these sprinters have found a way of doing this. So it's either by having relaxed KYC for low-value accounts. I think this is a point that you mentioned. It was also discussed earlier today in the panel about KYC and in the opening panel. There are new guidelines today from the FATF, from the international standard-setting bodies, around encouraging to have tiered KYC, so based on the risk of the account. So if you have an account with lower transaction limits, well, the risk is lower, so perhaps we can have lower KYC as well. And then if you want to be able to do more transactions, use the wallet for more usage, then you have to go to the branch, show full KYC, and you can upgrade your account. Anyone else wants to react or give an example, perhaps?
No, I think it's also your question. It raises because now this industry, which is still young, it starts to have some history, and it's a bit difficult also for all of us to really analyze it right. But if you take the history of mobile money, it has started with simple use case and limited thresholds and simple processes to enroll. And now it is developing so much as an industry that we have, let's say, very innovative service, and this service will grow further in the next year. So I think what is important in the Egyptian agenda and for any country where we want to promote development is to go. It can be done in an accelerated way, but you have to go from this path. You need to start with really a set of services which can be done simply in a scalable way. And then you will go to higher thresholds, higher amount of money. And of course, this is the logic of KYC. The more you grow in the value chain, the bigger, let's say, your control and your constraints on the activity have to be. But it's very important, what I take from your question, and this is, I think, one of our lessons, is you have to manage, let's say, this expansion in time. If you start from the beginning with a full scope, but also highly constrained agenda, then there is a possibility that you will not be able to educate the mass of customers to go through the adoption of mobile and what it can deliver to them.
If you allow me to add also, it is very gentle and very complex issue. Obviously, everybody wants to have the services implemented right away and very fast, but also from the customer due diligence perspective, the risk that transaction is going to go to absolutely wrong person from the CDD perspective is extremely high. Maybe 10 years ago, this would be really hypothetical discussion. But right now, and central banks and financial institutions, licensed institutions who actually taken the risks and full liability on the CDD and counter-financial terrorism, the risk is extremely high. We have a number of cases where our licenses was almost pulled because it was breached of the CDD requirements. So, for example, from our side in all of our implementation, we're doing lots of technological enhancements. So during the transactions or during KYC process, we're looking at the sanction screening lists to make sure that individuals on the other side is actually not in the unwanted list. So it's not only a piece of KYC, but also CDD, CFT, which is extremely important, because the risk is extremely high. It can be a successful service, lots of transactions, but license can be pulled at any given point of time if the wrong person on the other side of transaction, and this is only fair to the regulatory regime.
Well, I agree with you. I actually think it's about proportionate regulation, because I think if you have many small transactions and you can track them, right? It's somebody transacting $10, $15, $20. With systems, if you're really engaging in significant anti-money laundering, you are going to get it and track it. So one of the things that I think we believe in is really for financial inclusion, you do want to make it as easy as possible for people to hold accounts while fully observing AML and CTFT. Well, if anybody who's ever dealt with IFC as an investee knows that we are very anal about this in a certain extent. So we do take it very serious, but I think that what specifically the group in the World Bank that works on regulations advocates is proportionate regulation. So regulate in proportion to the actual risk that is commensurate. And I think central banks that have done this quite successfully are banks like the State Bank of Pakistan, that's really looked at a tiered approach and has increasingly onerous KYC requirements as you increase the risk and the kinds of financial transactions you engage in. I'm less familiar with the Egyptian situation, so I'm glad the Orange colleague did that.
Do we have more questions from the audience? Yes, there's one here.
Hamad Sawar from Alex Bank. I have question to Vodafone. Vodafone Cash was first service launched in Egypt, money transfer. How many till now? How many active transaction customers joining to your service now? Because it will give us a good indicator about the market.
I'm sorry, we don't disclose number about active customers so far. It will be published soon, but till we do, we're not disclosing information. It's considered confidential for us, but it's growing. And the good news is that it's growing with the benchmark with other markets that have launched. As I was telling Claire now, that we see that very soon we'll be among the sprinters. So it's doing good, but disclosing numbers now.
Okay.
Sorry for that.
Can I just follow up as a company which launched 3 days after Vodafone? It's not anymore about how many customers and how many dormant wallets there are. It's all nowadays about how people actually transacting and how often they're transacting. And Egypt is a very unique market, and we saw it with our customer base who is using FLUS, obviously the proper name for the Connected Commerce Service, in Egypt. So with FLUS, we see very unique phenomena. The volume of transaction per individual is usually ×2 compared to what we see in our East African countries. So if, for example, in Tanzania, individual transacts this amount of money a month, in Egypt, this is twice. So this is very interesting phenomenon. So it's not only in the quantity of transactions, but in the amount of transaction, though the GDP per capita is pretty much in the same range. And we see it's across the entire footprint. Egypt has a phenomenal potential that people who actually have account, they do lots of transaction. And this is a very interesting observation in the market. And usually in the beginning, in the first 6 months, you see very low take-up. In Egypt, take-up in terms of amounts transferred and in terms of quantity of transaction is very interesting.
That sounds very, very promising. I think we have time for just one more question. There's one here.
My name is Ibrahim. I'm from Bank Jukair. I would like to ask for Vodafone also. 6 years back or 7 years back, you launched Vodafone Cash. What's the difference between the old model and the current model? And what are the lessons learned because you stopped the old product? Thank you.
Okay. Well, the Vodafone Cash product that we launched years ago, it was, again, everything was different back at that time. So, for instance, we were the only ones launching a money service. It was a card solution, not a cardless solution, so it makes a big difference now. Also about the mechanism and the customer experience, it was completely different. So, I mean, we've learned along the way, and we now have a lot of success stories to learn from. So we came back with an enhanced solution, and everybody in the market now has this product. So again, potential for interoperability soon once, as Thierry said, we have the operability set and stable. So that's the difference. So you can say that there are two different products.
Thank you, and thanks everyone for staying with us this afternoon. Please, I think we can applaud our panelists because it was a great conversation. Abhishek, Margaret, George, Thierry, and Yasser. Thanks again for coming, and enjoy the rest of the day.